Today's episode of the Aussie Share Trader is proudly brought to you by Soxy the Wonder Dog.
Hello YouTube. It's good to be back. I'm back in Australia after my big holiday, well it was a family holiday to the US. We had a great time over there. I'm glad to be back. It was a long time. We were there for a month and we got on great. Like, I've got two teenage boys and my wife, and we are in a hotel room for that long, or lots of hotel rooms actually, for that month. Yeah, things could get a little testy, but really they didn't, not to any extent anyway. And I was quite surprised how good we got on. Having said all that, it is good to get back home and get back into your routine, into your own bed and into your own space. But yeah, I will make a video about the trip to the US. It's an interesting place, much like Australia, but culturally there are differences, and it was an eye opener. But one thing it did do, being in New York especially, it got me very, very excited again about making money, which I'd sort of lost interest in to a certain extent over the last probably couple of years, well, last 18 months, I guess. So it's such a capitalist society, and they are more, I guess they're more driven perhaps than we are, and they're striving, especially in New York, in Manhattan where we stayed. They're striving to get ahead. So many people, and just walking around on Wall Street and just around New York itself, it did really inspire me it got the fire burning again as far as the trading goes and investing in the stock market. So that's why I'm back. I'm excited to be back, and yeah, I've got I think some really good ideas for this channel coming up over the next few months and years, and until I get bored again. See, that's the thing about the stock market, and it's been the thing my whole life. I drift in and out with the stock market every few years, and I feel I can do that because it's always there. When it gets too much for you, just sell everything, or just have a long-term portfolio and give up trading for a while. Which I didn't give up completely, but I have been very quiet. Compared to what I was probably 3 or 4 years ago. So that's where I've been. That's where I'm at now. Like I say, I'm back looking at the market constantly. I'm excited by it again, and I'm excited to be back on this channel and hopefully bringing some quality content over the coming however long. You might have noticed a new addition. I've actually decided that I am blind and I need glasses. Now, when we were away, I wanted to read a lot, and it gets to a point, I don't know if you're in your 40s and 50s, you probably understand this. It gets to a point where your arms are no longer long enough. You need to get that book further and further back, and you need really good light. So I just bit the bullet and got some glasses, and this is how I look now when I'm doing things up close. If you're not wearing them yet, probably one day you will. So, and it's okay. It is a bit of a pain in the ass. It makes me sound old. When I'm saying, "Where are my glasses?" Just all of a sudden, that's what my dad used to say, or my nana used to say. And now I'm saying it. So, anyway, so this video here, just for a bit of fun and maybe a bit of education as well, I wanted to look back at a video I made nearly 2 years ago. Actually, it was 2 videos, but I've put them together in this one. I made them in November. Well, the first one I made in November 21, and the second one was about 2 weeks later, December 4th or 5th, somewhere around there, of 2017. And they were from a question from a viewer about my long-term portfolio. So I gave 10 stocks back then that I thought would be good for the next 5-10 years. And so I just thought it would be interesting 2 years later just to see where that portfolio would be at if you'd invested $100,000, how much would it be worth now as compared to the market? Now, the market in that time has grown by about 12%. Just the XJO is about 12% up. So that portfolio had to compare to that. And I just thought it was interesting to go back and have a look. So without any further ado, I'll put the vid on and have a look, and I'll come back on the other side and discuss it a bit more. Okay, so the first one I speak about is REA.
Okay, so if
now,
watched any of my videos,
at the time, and still, one of my favourite stocks, if not my favourite stock on the ASX, and probably not my favourite these days, but still, it's a very good stock. And I had no hesitation at talking about this one first. Look at the chart there. It was just just a beautiful chart to look at, and it's not much different these days. Back then, on the day I did this, it was $77. And as of today, the stock is at $106.53. So REA is up by 38.35% in the last, let's just say, 2 years. So that's a good stock. It has been a good stock. Now, the second one that I speak about is Downer EDI, DOW was the code. Back then, it was at $6.65, and as of today, when I checked, it's $7.92. So that one is up by 19.09%. So another reasonably good result. And this, I should say that this isn't including dividends as well. So I think all of these are dividend-paying stocks. I think, yeah. These returns aren't including dividends, so they're actually better in real life than I've got on paper here. But comparing it to the XJO, that's not including dividends either. So I guess it's apples with apples when we leave the dividends out. But in real life, obviously, you're getting dividends as well. So Downer was, it's a reasonably good stock. I guess a 20% return in 2 years is, it's good, not great, but good. That was down to the third stock, which I don't think I've got to yet in this bid, but anyway, I'll just skip ahead because I know what I'm going to say. Was Treasury Wines. At the time when I did this vid, it was $15.75. And today it's $18.58, which is a gain of 17.97%. So again, not too bad, Treasury Wine. So the first three I was, when I was working this out, first three I was pretty happy with, all positive.
Okay, the third stock, and I have spoken about this one as well.
I'm just getting onto Treasury now.
And that is Treasury
I'm going a bit too fast here.
TWE. They've got $11.5 billion market cap.
There's the chart for Treasury back then.
Global wine company.
I guess I can talk about some other stuff while waiting to catch up. Just got back from America. I will do a vid about America, my trip there. It was pretty awesome. So I'll do a vid about, if you're going to go there, some things I learned that I wish I'd known before I went. So anyway, look out for that vid coming up in the future. The fourth stock that I recommended back then turned out to be an absolute ripper, and that was WiseTech, WTC is the code. Back then it was $12, and it had just shot up to $12 as well, because it had been around $6 not long before I did this vid. And when I did this vid, if you want to go back and watch it, you'll see what I was saying about it is it had run pretty hard, and I was a bit worried about it at $12. But I needn't have been, because since then it's been a cracking stock for me. And today it's at $35.49, so up 195.75%. So nearly tripled in the last 2 years. So that is the best stock that I own. It's just turned out to be a remarkable company. It's in the logistics, the shipping. I can't remember exactly what it does, but I know it basically had 19 of the 20 top shipping companies in the world use it, and they're sticky customers, like no one leaves, so this company could be anything. It's priced as such as well, so it looks expensive, but hell, it's just been a great gainer, and one that I think you just hang on to for the next 2 decades. I guess you can't be too confident about these things, but it is a ripping stock. And the last stock that I speak about in this vid was TPG Telecom, which is TPM, the code. When I did the vid, it was $5.79. When I checked today, it's $6.90. So another one with a nearly 20% gain, 19.17%. So yeah, pretty good. I did this, as I said, in 2 videos. This was the first vid, so this is the first 5 stocks that I spoke about, and they were all good. The worst one being Treasury Wines, which put on 17.97%, but yeah, everything else did well, very well. So I think we're at the end of that. We'll flick on to the next vid.
TPM. They've got a market cap of around about $5.2 billion. To me, this company is all about David Teo, the managing director.
The first one I spoke about was Magellan, MFG. Back then, it was at $26.70, and I checked today, and it's at $51.48. So another cracker. Magellan's been really, really good, up 92.81%. Can't complain too much about Magellan. They just keep growing their book, and they invest the money so well that yeah, you really can't say anything bad about Magellan at this stage. Now, the next 2 that I speak about have both done poorly. Thank goodness, because you know, you got to have a couple of dogs in your portfolio.
If we're looking 5-10 years, of all the fund managers on the ASX, this is my favourite. I would happy to hold these guys. They're a little bit volatile.
The first one was Japara, JHC. When I did the vid back then, it was out $2.19, and of course there's been a lot go on in the health, in the aged care sector in the last 2 years. I think it's some really good buying opportunities at the moment. Japara, Regis, Estia. Yeah, I had a bit of a look at Japara, and they just look a screaming bargain. Currently at $1.18. As I said, back then they were $2.19, so they're down 46%. So yeah, they've been a really bad stock for me. The next one as well has been poor, not quite as bad, but nearly as bad, is Costa Group. They were $6.38 when I did the video, and now they're $3.58, so they're down 43.89% as well. Look, I think there's a bit of upside with them in the future, long term, hoping they'll be okay, but as it stands now, going very poorly. The next one was my old favourite, is BHP. They were $27.17 when I did the vid. I was pretty confident about the mining sector. I remember at this time, the iron ore price and mining in general, I was fairly bullish on, and BHP is generally my go-to stock because they're so diversified, and they've done well. They're up. They were $27.17 when I did the vid, up to $37.67 today when I checked, so up 38.65%. So they've done well. And the last one is Fisher Paykel, FPH the code. Our friends across the ditch, they were at $12.18. Today they were at $15.59, up 28%. So another fairly decent one was Fisher and Paykel. Okay, so there we go. Out of those 10 stocks that I spat out 2 years ago, there are 8 that are currently up and 2 that are currently down. And the 2 that are down are both down quite significantly, over 40%. But in a balanced portfolio, you're not going to have all 10 stocks running at the same time, or unlikely. So the real upshot is what is the overall portfolio doing? And just looking at those figures, and just to keep it easy, I haven't included dividends, but obviously they're all dividend paying stocks, so there would be dividends as well. But just on the capital appreciation alone, and I'm going to assume that you spent $10,000 on each stock on that day, and just to see where that is, nearly 2 years later, that portfolio, $100,000 portfolio, would now be worth $135,978. So just under 36% in a bit less than 2 years, and that's not including dividends, as I've said. So that's, I mean, if you include the dividends and and extrapolate that out further, that's about a 20% year-on-year gain. And if I could do that, or you could do that consistently, within a not too long period, you would actually be very wealthy. It is difficult to get that sort of gain though over a long period. But just an example, if you started with $100,000 and got even 18%, I worked this on 18% return, in 20 years, 100,000 will be $2.4 million. And again, that's not including dividends. And you might say, saying, I don't have $100,000 to invest. Well, everyone starts at the same place pretty much. It's zero. So if you're 25 and you've got $5,000, but you've got more time than, say, someone who's in their mid-40s like me, if you invested $5,000 and got an 18% return over 40 years, then in 40 years you'd have $3.4 million. You've also got to have sort of a long-term perspective, even with your trading. You're trying to build wealth over time, not get rich quick. Okay, so there we go. Interesting, I thought. Okay, no worries. Thanks for watching, guys. I will be doing more vids in the near future. I've got a few more ideas I want to get off my chest in the coming week or two, and then we'll see how it goes over the long term. Just what comes of this channel. I'm as interested as you to find out. No worries, guys. Thanks for watching. We'll talk soon.